afternoon, and welcome to our 11th Annual Emerging Leaders Awards hosted by the M&A Advisor. We're delighted you can join us here today. I'm TV host and radio personality Rosalie Michaels, and I am thrilled to have such a well-rounded and deserving group of recipients to honor this evening. These awards recognize the emerging leaders within the M&A, financing, and turnaround industries, and promote mentorship as well as professional development amongst developing individuals in our industry. In addition to celebrating the accomplishments of these standout performers, the awards gala will also feature an amazing keynote panel discussion and messages directly from market participants like yourself. And now I would like to introduce Roger Aguinaldo, founder of the M&A Advisor. Roger.
Former Secretary of State Colin Powell once said, "Leadership is solving problems. The day soldiers stop bringing you their problems is the day you have stopped leading them. They have either lost confidence that you can help or concluded you do not care. Either case is a failure of leadership." Welcome to the 11th Annual Emerging Leaders Awards. Like everything nowadays, I want to thank you for joining us virtually. Since 1998, the M&A Advisor has been facilitating connections and recognizing achievement of the top performers in the M&A industry. This year, we're celebrating our 21-year anniversary and our 18th year holding our awards programs. In 2002, when we began these awards, we only had two categories: Investment Banking Firm of the Year and Private Equity Firm of the Year. The event was modest, where we conferred the awards during an intimate luncheon. Since then, the awards have resonated with professionals in the M&A and global industry and beyond. Over the past 18 years, we've conducted over 55 awards programs in M&A, financing, turnarounds, international arenas, and the Emerging Leaders Awards, previously known as 40 Under 40. We've recognized over 5,000 transaction finalists and winners, representing approximately $1.5 trillion in enterprise value. As we reflect on Colin Powell's words, maybe you're a leader in title, but in reality, have people stopped bringing their problems to you? Has your team lost confidence that you can help or concluded that you do not care? Either case is a failure of leadership. As the emerging leaders were selected, each of you certainly has, as Colin Powell puts it, solved many problems in many aspects of the M&A, financing, and turnaround industries. As a group, you have worked on tens of billions of dollars of transactions just in the past year alone. I would venture to say that every award recipient joining us today virtually has at one time felt the desire to get away from these problems. Real leaders stay and actually run to these problems and are excited by the challenges to solve them, not just in business, but also in their communities. Although the professional experience at such a young age is admirable, all of you joining us today also contributed to your communities and your charitable organizations. Nearly 90% of you donated considerable time sitting on boards and fundraising for charities, such as nonprofits benefiting children, the American Cancer Association, and local religious organizations. Although we do not keep these statistics, I would venture to guess that millions of dollars are raised through these efforts. The M&A Advisor, renowned globally for its recognition and presentation of leading M&A, financing, and turnaround professionals, created these recognition awards programs to promote mentorship and professional development amongst the emerging business leaders. For over a decade, we have been recognizing U.S. and international transactions, firms, and deal makers for their achievements. In 2010, we initiated these Emerging Leaders Awards programs to recognize these emerging industry leaders. And early last year, the M&A advisor issued a call for nominations to all M&A financing and turnaround professionals who reached a significant level of success in the industry while still under the age of 40 to enter nominations. The nominee must be under 40 years of age before January 1st, 2020. And from these nominations, award winners were vetted and successful nominations were packaged and presented to 40 independent judges, a panel of industry experts who independently judge the finalists. On the screen are all the judges, and I want to thank them all for all their hard work. This panel of independent judges, chosen for the industry expertise, evaluated the qualified nominees from which winners were selected in each of the following 4 categories: dealmaker, private equity, legal advisor, and service professional. The nominees were judged on the following 4 criteria: career accomplishments, professional expertise, community and/or charitable activity, and other unique individual circumstances. The M&A advisor proudly announced the selection of winners who are being celebrated here this afternoon. This year, our judges reported that they were truly challenged to select winners in each category from such an accomplished group of award nominees. Before we begin this award ceremony, I'd like to offer some encouragement to those of us over 40 or not so emerging, or may not be so much a leader. Cartoonist and satirist Scott Adams once said about leadership, "Everyone says there's a lack of leadership in the world these days." I think we should all be thankful, because the only reason for leadership is to convince people to do things that are either dangerous, like invading another country, or stupid, working extra hard without extra pay. To all of you here who have joined this celebration, I want to thank you for supporting these emerging leaders. Without the help and support of you, spouses, family, friends, and associates, the awards recipients would not be the people they are today.
Thanks, Roger. Now, before we kick off, I wanted to give a quick thank you to our 2021 program sponsors and supporters. Thank you to UHY Advisors, Generational Group, Melcap Partners LLC, L. Catterton, Leonis Partners, Churchill, Jordan Knopf and Company, Horizon Partners, Prairie Capital Advisors, Ernst & Young LLP, Wombat Capital Markets, Kramer Levin, Stradley Ronan Stevens & Young LLP, Global Upside Corporation, SB 360 Capital Partners LLC, Capstone Headwaters, Axit Capital Partners, Paulsonelli, and VRC Valuation Research Company. Your support makes programs like this possible, and we encourage you all to visit their websites and set meetings to learn more about their products and services. Now, this year's award winners were tabulated by an independent judging committee comprised of top M&A industry experts. And now, let's get right into it. Our winners this year: Jamal Al-Haj, partner, Maynard Cooper and Gale; Cheryl Batance, Managing Director, Stretto; Timothy Bossidy, Director, Sierra Constellation Partners, LLC; Robert Burton, Managing Director, Leonis Partners. And now a word from our friends at UHY Advisors.
Hello, and welcome to the M&A Advisors Market Spotlight interview. I'm Andrew Cardona, Managing Director with the M&A Advisor, and I'm thrilled to welcome this year's Accounting and Due Diligence Firm of the Year award winner and partner of UHY Advisors, Corey Masella. Thanks for joining us here today, Corey.
Thank you for having me, Andrew.
To kick it off, what were the trends you saw near the end of 2020, and what are you seeing in the opening of 2021?
Well, near the end of 2020, there was a big acceleration in the in deal activity. There was some that was still continuing at the right around COVID, a little bit after that. but all of a sudden we started to see a little more fuel to the fire and a lot more confidence and a lot more LOIs going out there, and both on the buy side, the sell side. And there was a big push in December because everybody was trying to get their deals closed in fear of tax increases. That kind of dwindled because, under COVID, it's been a little tough to get deals done. And then we're seeing in 2021 the continuation. It's been, like off the charts. It's been very good. And, there's a lot of LOIs and a lot moving forward. There was a lot of progression where things weren't getting far and deals weren't closing, but they're really starting to, there's momentum and people are getting a little used to the COVID times and the circumstances. So good, all good.
And what industries are you seeing the most activity of deals entering into LOIs and closing?
We're seeing a tremendous amount in the healthcare industry. No surprises there. The industries that are revolving around the healthcare industries, professional services, those that are supporting compliance related to that. And then we're also seeing a lot of deals in the new world and the acceleration of industries that were basically stagnant and have fueled because of COVID. For instance, an example would be auto parts. Auto parts and e-commerce. That all of a sudden, that company accelerated to, they were up 30-40%, and they were able to get a deal done. We've seen some other ancillary businesses that are doing well, that are supporting people being at home in e-commerce industries too. And then some tech-enabled that are supporting, COVID situations, whether it's learning processes, learning platforms. And the last part would be stable businesses, because money's got to move in some shops and they want to get deals done. Stable businesses that are not being affected drastically by COVID are now all of a sudden become sexy, and they're in play, and there are deals and platforms that are starting to be established to do focuses on those industries too.
And what are some of the continued impacts COVID-19 is having on these deals?
Well, COVID-19 is definitely having an effect on deals. We had to make adjustments when we were working on deals to kind of figure out what the impact was of COVID-19, and there were certain presumptions of the impact. And then, as if you were to look at COVID in April, May, in June, the impact at that point, especially March, April, May, the impact at that point, especially in certain areas with shutdowns, was pretty severe. And it had a significant impact in industries such as those that support healthcare, where they were shut down and they couldn't get in there, they couldn't get the people in. You also had the effect of PPE, delays in processes. So there were calculations and deals trying to figure out what that impact would be. Then all of a sudden you get to the middle, you move past there, and all of a sudden the impact isn't as severe and things are starting to pick up. So what you thought you were adjusting for before, all of a sudden changed, and now you had to take it from, whether you were a seller or a buyer, you had to take it from the other's perspective and make adjustments for what would be realistic and acceptable from the other side's viewpoint, and try to find a medium of what was effectively acceptable from either party for COVID adjustments. And lastly, it again depended upon the industry and the circumstances of what it was. So it's been an interesting time, but people are starting to settle in and understand what that means and what's acceptable and how to structure deals. And it's restructured deals, whereas the original LOI and then what you're getting close to, to the purchase agreement has definitely been adjusted because of COVID. So, and the changing times that we're going through right now.
Great. And as a wrap up, can you please discuss what you were seeing trending in public markets, IPOs, and SPACs?
Yeah, what we're seeing is, SPACs is the operable word there. I've been around a while and I've dealt with SPACs, going back in time. And I've never seen SPACs so acceptable and have gone to the magnitude of the thresholds of the sizes of the SPACs that are being raised today, and the quickness of how SPACs are moving forward and raising money and then finding private companies and moving forward. Which when they do that, it's effectively a reverse merger of blank check. But the acceleration has really been there, and it's become much more acceptable and much more acceptable for investors to put money into SPACs and take that risk with whoever those are of those SPACs. We also have seen that as a way that we've been doing a bunch of SPACs that are the SPACs themselves getting registered and going to the SEC, and at the same time, we've had our clients and other clients go out there and are doing deals in certain industries, whether it's 5G telecom, technology companies. They're getting out there and they're getting nice offers, and they're going down that path of going into a SPAC for a partial exit and to move forward. We're also seeing that the VCs. I'm going to also say that VC activity, because that's another space that has been, again, off the charts. We're seeing big tranches on a lot of our clients in different sectors of technology, healthcare, and life sciences, where there's been during COVID, a significant amount of money coming in as second, third rounds. These are Series C's, Series D's, and these eventually are some of these platforms are then looking to the next phase, which will either be an IPO or a SPAC. So people want to go down that public market route where they've stayed private longer previously. So it's a mix, but there's definitely, the money flow has really picked up post, I would say, July, but it was there before, but it's definitely active and it's good. And hopefully it continues into 2021.
Great. Well, that's all the time we have for today. And thanks again for joining us. Back to you, Rosalie.
And the next winners are Swapna Deshpande, Managing Director, Ancora Consulting Group, LLC. Nick Desi, Partner, Latham & Watkins, LLP. And Dulesia, Partner, LEK Consulting. And now a word from our friends at Leonis Partners.
Hi, Rob Burton here, Managing Director with Leonis Partners. Very excited to be part of this event. We are a middle market investment banking firm focused on M&A and capital raising for technology-focused businesses. We have a special focus on entrepreneurial-owned businesses who are coming out to the capital markets or to private markets to raise capital for the first time. Really have a direct focus with technology and technology-enabled services and businesses within that sector. Have had a wonderful year this year and very excited to be at this gala. Really excited to see all the great people here, to enjoy the rewards of what has been a very difficult but also very successful year for us. Had one of our best years ever with some very large deals and some very difficult transactions occurring even during the COVID environment. We've continued to see businesses that have strong revenue growth, strong earnings, and strong market potential transact at very attractive valuations. And we're very excited actually for this coming year. We think there is a lot of momentum behind new businesses that are growing within the technology and software spaces to come out to market, to come out and find good homes with new partners and to transact in a way that is exciting for both the entrepreneur and for the new partner coming in. Very excited to be part of that those engagements. Very excited to be here to honor and celebrate some of the engagements that we've done and the rest of the group here has done over the course of the last year. and looking forward to the next 12 months of growth within our firm and within the M&A market.
And the next winners are Brian Dow, Managing Director, Stifel. Matthew Drake, Managing Director, FMI Capital Advisors. Dominic Emery, Managing Director, Raymond James. Amanda Fenster, Partner, Mergers and Acquisitions Practice, Weil, Gottschall and Manges, LLP. And now a word from our friends at SB360 Capital Partners, LLC.
Hi, I'm Tiffany, and today I am joined by Aaron Miller, Executive Vice President of SB360 Capital Partners and a recipient of the Emerging Leaders Award. Welcome, Aaron.
Good morning.
For those not familiar with SB360 Capital Partners, can you give us a little bit more background on what you do?
Yeah, so SB360 Capital Partners is a Schottenstein affiliate, which is the large retail organization. Jay Schottenstein is the chairman of DSW, American Eagle, Value City Furniture, and SB360 Capital Partners. SB360 is an asset disposition specialist, both in retail, wholesale, really anything in consumer and retail. We also have a debt platform, Second Avenue Capital Partners, that we founded 2 years ago, which is very active in the middle market asset-based lending space. Really made up of merchants and retailers that a lot of our folks at one point in time were at large retail companies and now have come onto the team and specialize to help retailers, whether it's monetizing excess merchandise or closing underperforming stores, or the unfortunate event of a full chain liquidation.
Thank you so much for that insight. To build a little bit more on everything SB360 Capital Partners does, 2020 has proven to be a challenging year. How has SB360 set itself up for success during this unprecedented time?
Yeah, so a couple things. I think one of the advantages that SB360 had, when we were or continue to face the pandemic, is at the forefront. We have active retailers in our portfolio. So Jay Schottenstein had myself and all of the SB360 executives involved with American Eagle, DSW, and Value City Furniture to kind of monitor what was happening across the country. And so in real time, we were part of discussions of how ourselves were going to kind of pivot and react to make sure that we kept our retail footprint, which is thousands of stores across the country, open or, able to continue to operate in some form or fashion, whether that's curbside pickup, et cetera. So, that was one of the benefits of SB360, to have that real-time experience, so that when we were getting calls from our clients and also from lenders and private equity groups during the pandemic, we were able to share kind of our insight that we were experiencing in our own retail footprint.
Building on that, I know you've facilitated and worked on a variety of deals. Can you build a little bit more on some of the previous points you mentioned, comparing and contrasting the retail space, liquidation space, and how that's shifted since the start of the pandemic? Do you see or anticipate some of these changes being permanent going forward?
Yeah, it's a good question. So, one of the differentiators of SB360, being the emerging leader 40 under 40, I'm on the younger side of the executives in the liquidation space. And we've done a lot to change what's been done the same way for a long period of time. We have great technology these days that we can utilize for the benefit of both our clients and also for our field team to work smarter, and what I like to say, work smarter, not harder. So a lot of the things that we've been implementing in our organization over the last several years proved to be very beneficial of operating a liquidation during a pandemic. We have technology at our fingertips. We have FaceTime, we have Zoom. We can kind of walk through stores without actually being in the store and seeing the merchandise metrics. We always say it's both a quantitative and qualitative approach. So I'd say, all of those tools really benefited us. I think one of the key challenges in a post or in the midst of a pandemic liquidation has been, how do we interact with our clients? So typically in a liquidation, our executive team and some of our field team is at corporate headquarters. We have not been able to do that in our 3,000 plus closings coming out of when the country reopened. So we've had to really pivot and get find a way to have that interaction with our clients and the executives from the retailers. And one of the benefits that we found is these video conferences. We have one every morning with our clients to make sure we're touching base and responding, because it's not as easy as just walking down to the CEO's office down the hall, because we're not there. So that's been probably the biggest challenge. And I think, there is something about being in person with those clients, but I think we've done a great job pivoting and reacting to the current circumstances. I think
so much for that answer. Yeah.
Another big challenge is just, we have hundreds of field supervisors that we deploy on these projects. And so things that before the pandemic were very easy, of getting somebody on a plane and having them go from New York to California, was very simple. We've spent a lot of time and energy of deploying our field resources because of, travel restrictions or quarantine restrictions, et cetera, et cetera. So one of the benefits, we have people, in all 50 states, but it also has been a challenge in certain instances when we have a regional chain and we need to deploy a certain amount of people to an area. It's proven to be difficult. So that's something that our team has been had to pivot and accommodate.
It sounds like SB 360 has really adjusted to overcoming a lot of the challenges 2020 has thrown your way. To shift a bit more and learn a little bit more about you, what have been some of the most gratifying, important, or favorite transactions that you've had recently worked on?
Yeah, it's an interesting question. I'm a big Tom Brady fan, and he always gets asked what's his favorite Super Bowl, and he always says the next one. These deals move fast and quick. We like to really roll up our sleeves and pour a lot of energy into these deals. So each one is unique in its own fashion, and they each are gratifying in some way or another. But there's a couple that stand out that I'm really proud of. We've been involved in a couple unique situations this year. One was a company that we were actually engaged to close 15 stores. And once we got under the tent, and I looked at it, there was a reason that company should exist. And after speaking to the professionals around, I recommended they speak to our debt platform, Second Avenue Capital Partners, to see if they would provide more availability in their borrowing base that otherwise was being given by the incumbent lender. And so that ended up coming to fruition, and Second Avenue provided a debtor in possession credit facility. We actually only ended up closing 4 stores, and that company emerged from bankruptcy and is thriving in today's current environment. So that was, very gratifying to be able to utilize all of the different tools in the toolbox that being part of the broader Schottenstein organization, and being able to introduce a client to a new lender and seeing them come out of bankruptcy, which otherwise there would have been lost jobs, and that company probably wouldn't be around today. Another project that stands out during the pandemic, right when the country reopened, we actually started a large store closing project for a Cena retail group. And that mandate was at that point, we didn't know if the country was going to shut back down. And so the mandate was to liquidate $250 million of retail inventory within 4 weeks. So in the normal time, that would take 8 to 10 weeks, and the mandate was to do it in 4 weeks. So we implemented and rolled out a strategy to address that. One of the variables that we didn't know is what the foot traffic would be as the country reopened. So there was a lot of pressure on our team Every day we had to crunch numbers and data, quantitative and qualitatively, and ultimately it was a very good outcome. That liquidation yielded in excess of the anticipated results, and the client was very pleased. That was in a bankruptcy scenario. I think the other real gratifying deal that we've been involved with was a deal outside of bankruptcy where we actually closed almost 500 stores for a client and had to pull permits and allow us to operate and utilize the language that we wanted to utilize it for the advertising. And so that was a deal we worked very closely with the other professionals involved in the case and actually successfully wound down one of their retail banners outside of a bankruptcy process, which saved the company significant dollars in their restructuring costs. And it was a very good outcome for our client, and our client was very happy. I think that's the big takeaway, is always making sure our clients are happy. One of the things I'm proud of is on every deal that we've been involved with since commencement of SB 360 Capital Partners is we have recommendation letters from all of those clients, really being satisfied of the way that we've professionally handled ourselves and also the financial outcome.
It really does sound like SB 360 has been thinking outside of the box and really creating custom solutions for each of your clients. And that in itself is a great example of some of the contributions that you've helped put forth in the community. And I just want to take the time to thank you for everything you've contributed to the Turnaround M&A and finance community, as well as all of the other recipients of the Emerging Leaders Award. Thank you.
Thank you, and thank you to the M&A advisor for acknowledging, really everything that SB 360 is doing and this reward, and congratulations to the other recipients.
And the next winners are Hillary Fleischer, Partner, Stratum Capital. Keon Francis, Vice President, Branford Castle Partners, LP. Shannon Glomboski, Managing Director, Stifel. And now, I would like to turn it over to our friends at Horizon Partners.
Okay, well, hello, everybody. Happy 2021. New Year's always a great time from my perspective to sort of retool, think about what matters most, and kind of move forward with vigor. So hopefully this brief presentation on Horizon Partners will not be of the ultra boring variety. Here on the screen, you see kind of our lead-in slide, which is got this by bootstrappers for bootstrappers tagline to it. We are sort of a differentiated firm. I'd probably go so far as to call Horizon Partners an ultra boutique based in the Presidio of San Francisco. Not only have we been very specialized in technology, but we have also really focused in on a subsection of technology, which is the technology bootstrapper. And so I think for just about everybody, that's probably a term that you're very familiar with, but founder run enterprises, founder financed enterprises. And in fact, within the financing category by entrepreneurs, it's really a business that has been built on itself. So from a very early period, having found product market fit, finding customers right out the gate that will pay for the products provided, and then the business has been profitable enough to sort of sustain growth for a meaningful period of time. Horizon Partners focuses on transactions in really the $50 to $250 million enterprise valuation ranges. Over the last couple of years, our average transaction has probably been right around $100 million. And so this by bootstrappers for bootstrappers also means myself and my co-founder, Sandy Corey, built the firm without outside capital. I think that's not as hard to do, as we all know, in financial services as it would be in software and other markets. But it's been a great pleasure over now, I guess, 11 years to work very closely with founders at kind of this critical moment when they're ready to monetize at least some of the value that they've built in their business and in some cases sell the entire business to a strategic. We've got, I think it's somewhere around a half dozen slides here. I'll flip through most of them very quickly, but it'll give you a sense for what Horizon is about. I think with the bootstrapper in this slide, we'll kind of move through it pretty quickly, but our focus has been built around what I would say something that sits in between a traditional investment banking model and then strategic advisory and operational advisory. So when we get working with a client, often it'll be a year, year and a half, even 2 years and beyond that we're involved in the operations, thinking about go-to-market. Often with a bootstrap business, you've built some incredible strengths around product market fit. In many cases, you find a business that is what is now often termed a product-led business or product-led growth. When we started the firm, that was not a term that folks were familiar with, but it's sort of these very, very capital efficient companies that do certain things very, very well, but don't have much of a back office. Typically, there's not a CFO. Often there's not a controller, and you might have a bookkeeper, a local accounting firm behind it, no legal. Often the organizational documentation was sort of done on LegalZoom. And so when we get involved before we take a business to market, independent of sort of the significant enterprise value that these companies may have, we work to put the business in a position to sustain a full closing diligence process. And often that puts us in the position of investor, so to speak. So it may not be investment of firm capital, but it'll be investment of often, 1,000+ hours of our time before we even take the business to market. So this gives you kind of a sense for how we think of the world. This next slide, it's a very, very busy slide. And in fact, I think it's one that I wouldn't want to spend a whole lot of time on, though the center, I think, is really important. Often with a bootstrap business where documentation may be light, and without a strong advisor and partner, you would not be in a position to kind of deliver all of the diligence necessary to close. Credibility would be diminished. And so our process is built around enhancing credibility where the business that has been built and the beautiful components of that business are not sort of hindered or diminished through a little bit more of a haphazard closing back end. And so that's really at the center of what we do at Horizon Partners. Moving along, this is a nice visual depiction of what we're about. You see this 90% plus close rate. That is actual, and that's of the clients that we take on that pay us a one-time retainer fee. What percentage of those close? And so I think we've had just a few in our 11-year history that has not closed. And, those ones are typically founder gets reinvigorated during the process, and typically we'll close them in a second go round when the founder sort of feels like they've had the run that they wanted to have. And if you think about a 90% plus close rate, and if you think about a transaction process that may span a couple of years, including a year plus of sort of operational advice that we've given on the basis of a one-time 50 to 100K retainer fee, we have to close all our deals or else our business just doesn't work. And so the way that we kind of think about this is only take on clients where we feel like there's a tremendous alignment in purpose, alignment in kind of this product-led growth model, exceptional products that have a strong retention rate. Typically, our clients will have north of 100% revenue retention rate. And then that allows us to just really invest with our time and put the business in a position where there will be, easily a half dozen typically a dozen plus strong letters of intent, and then those folks will narrow, and often we close in a non-exclusive closing process. And so you can kind of see on this slide the background and the backdrop of what is Horizon Partners, starting with great fit, leading into doing a lot of data cleaning and getting into each component of the business, often illuminating for our clients for the first time what their churn rates actually are and how they can go about best practices to reduce churn rates, getting into their development model for a software company, and if they're not sort of agile, helping them to see the merits of agile. And we've had clients where we've helped them transition their development processes pre-transaction. We get into things like pricing. Often our clients, they found a great product market fit and the product has sold itself, but they've never considered whether they're underpricing or if they're not capturing the low end of the market because they're pricing too high, and there's an ability to sort of price discriminate. So it's really kind of a roll up the sleeves, effort first, business first approach. And then, fortunately for us, across 11 years, it's turned into just about every client we take on does transact. And that's, I would say by and large, Horizon Partners. These next few slides, nice backdrops on thinking or looking at how we view Horizon Partners. Credibility is at the forefront, we believe, in any transaction, and that whether it's a financial sponsor or a strategic acquirer, ultimately those folks that pay, top quartile and top decile and top percentile multiples in a transaction do so because they think that the business is credible in its capacity to grow in the future. And you see sort of three of these legs to the stool in this Venn diagram on how we think about credibility. As you consider what often reduces credibility for a bootstrap business is, those companies that command premium multiples tend to be in this growth stage. And so in sort of this chart, you see when you're prepared to grow, your enterprise value is expanding rapidly, but you also experience a lot of risk. And the, sort of numerator versus denominator, i.e. the growth and where the business moves against the discount rate, is really where folks determine whether it's sort of a 50th percentile multiple, middle of market, or whether you get into sort of the upper levels. And so for us, often it comes down to kind of this blue highlighted zone in the chart where our clients have done amazing things. They may be at 10 million annual recurring revenue, or 15 million, or even 20 million in annual recurring, with strong operational leverage, exceptional marketing efficiency, but they don't know how to present it, and their data may be messy, and so Horizon gets in and really helps to present a business that works with Horizon as growth ready and in a position to scale for the investors or the acquirers. And it's been really a great journey. We've as you see here, just with some of our clients, we've taken on CFO roles multiple times. We've helped software businesses that have been very successful to retool their software platforms, think about how they go about development and new product. We've helped businesses that have become global standards in the products that they provide think about their mobile approach and how to position it. We've helped businesses go from only cash-based financials to being the individuals in there doing journal entries. So, across dozens of clients and closed transactions in 11 years, we've just been able to have, these really unique relationships. We often call the brand of advisory that we provide artisanal M&A advisory, i.e. sort of this bespoke, highly customized transaction set. And, I appreciate y'all listening. This is probably longer, as often decks are, than I would have thought in putting it together. But what I would really hope for everybody in 2021 is that in the same way that we've been fortunate at Horizon to build a model that is filled with passion, where those strengths that we do have line up with the needs of our clients, I wish for each and every professional here that those same things line up in your unique businesses and models. Ours is different for a certain set of clients, and I'm sure there's things we would not do as well as your spectacular firms do for yours. So for all of us, here's to a more stable 2021, to many transactions closed, and probably more than anything else, a great deal of value added to the many clients that we're fortunate to work with. And that would be our piece here. Thanks for listening.
And the next winners are Jonathan Goodman, Associate, Kramer, Levin, Neftalis, and Frankel, LLP. Kristen Granis, Partner, Latham & Watkins, LLP. David Griffiths, Partner, Business and Finance Restructuring Department, Weil, Gottschall & Manges, LLP. And now a word from our friends at Melcap Partners, LLC.
Hello, and welcome to the M&A Advisors Market Spotlight interview. And I'm thrilled to welcome this year's Boutique Investment Banking Firm of the Year award winner and president of Melcap Partners, Al Melchiorre. Thanks for joining us today, Al.
Thank you, Andrew. Glad to be a part of it and glad to be recognized for a second year in a row for this prestigious award, and glad to be with you here.
Great. So to kick it off, how has the market shifted since the rollout of COVID vaccines?
Well, it's really impacted the process more than anything else. We say that, all businesses have been impacted by COVID, some good, some bad, but all have been impacted. But the thing that's interesting from our perspective is that as we're doing here, we've gone to more virtual presentations and virtual meetings, which prior to COVID, it isn't something that I think I would have been a big proponent of, but quite frankly, it's made us much more efficient. And obviously we've had quite a bit of success navigating through the past year in COVID, in that we had a record number of deals we were able to get done, both with domestic buyers as well as international buyers, and in large part through our ability to streamline the process utilizing technology. So there have been some unique benefits out of this that going into last year I would not have anticipated.
Great. And what do you anticipate investors should be aware of as we kick off the initial days of the Biden administration?
Well, the one topic that comes up all the time is, what's going to happen from a tax perspective. The anticipation is the tax rates are going to go up. To what extent, we don't know. I think last year we had a significant impact of deals trying to get done at the end of the year with the anticipation of that there would be a change in administration. So as we go into this year in 2021, what are those new tax laws going to look like, and how will that impact, businesses, and what impact might it have on the M&A community as well? So those are things that we're monitoring very closely.
Mm-hmm. And to wrap up, what is the outlook for 2021 in respect to organizations looking to sell their businesses, acquire another company, or even raise capital?
Yeah, it's interesting. I would say that when you look at last year, because of the stress that was on the market from an M&A perspective, during kind of the second and third quarter, there wasn't a lot of activity taking place as much as it happened in the fourth quarter. And as a result, there's still a significant amount of liquidity in the market today. So when we look at 2021, those businesses that have actually done well in this environment, we're actually seeing a flight to quality. That if you've got a business that's done well, that's survived through this, there's going to be a lot of interest in your business, whether you're looking to sell a business, raise capital. That we think 2021 still will be a robust year from an M&A perspective, and it'll actually still remain a seller's market for those owners that are contemplating that type of a transaction.
Great. Well, that's all the time we have for it today, and thanks again for joining us, Al. Back to you, Rosalie.
And the next winners are Rick Hennessy, Vice President, Butcher, Joseph & Company. Terry Jang, Director, Vaquero Capital. Dan Jones, Principal, UHY LLP. And now a word from our friends at UHY Advisors.
Good afternoon. I am Dan Jones, and I am a partner and managing director with UHY Advisors. UHY is a leading network of independent accounting and consulting firms in over 100 countries around the globe. After an incredibly challenging year, it's nice to have some positivity as we launch into 2021. I would like to thank the M&A Advisor for naming me an emerging leader this year and to congratulate all my fellow honorees. Like the M&A Advisor, UHY is also invested in the leadership of tomorrow. Our people set us apart and create unmatched value for our clients. We invest in developing professionals who are prepared from day one to bring you leadership and results, regardless of their level or role at the firm. I look forward to what 2021 brings and continuing to foster in the next generation of leaders at UHY and to help grow their careers and consistently deliver extraordinary results to our clients.
And the next winners are Andrew Kadar, Managing Director and Partner, LEK Consulting. Philip Castle, Senior Director, Sierra Constellation Partners, LLC. Samuel Kaplan, Vice President, Capstone Headwaters. Eli Kemmerer, Partner, RSM US LLP. And now a word from our friends at Leonis Partners.
Hi, I'm Robert Cowen. I'm a managing director at Leonis Partners. We are a technology-focused investment bank that focuses with entrepreneur-led businesses as well as private equity-backed businesses in the middle and lower middle markets, generally working with companies between $25 and $250 million in enterprise value. The vast majority of what we do in a year will be majority recapitalizations or strategic sales. We also help with minority growth capital raises. We are fortunate that we have a team of 20 folks that sit in New York and continue to advise some of the leading clients within the software and tech-enabled services ecosystems.
And the next winners are Amara Krishnamurti, Managing Director, Raymond James. Justin Lee, Partner, Banking and Finance Practice, Weil, Gottschall and Manges, LLP. Mark Logan, Partner, RSM US, LLP. And now a word from our friends at SB 360 Capital Partners, LLC.
Just want to say, for everyone, congratulations to the other recipients of the award. I know it's been a difficult and challenging year. We hope to see everyone in person soon. And if there's anything that SB 360 can provide any perspective on, we're always available via phone and love to be helpful on any matters in retail, wholesale, consumer products.
And the next winners are Lorie Lombardo, Principal, Entrepreneur Partners, LP. Sean McGuire, Managing Director, Stretto. Zishan Mamam, Managing Director, Stifel. Aaron Miller, Executive Vice President, SB 360 Capital Partners. And now, I would like to turn it over to our friends at Horizon Partners.
All right. Cheers to 2021's emerging leaders at the M&A Advisor. My name is Mike Firmage. I'm co-founder and managing director at Horizon Partners. Horizon is what we would term an artisanal financial advisory firm. So we work with bootstrapping technology entrepreneurs, and that's all we do, and it's all I've done for 17 years in my career. I just turned 40 last year. I'll be 41 in about a month. And I was fortunate to be named an emerging leader just a couple of years ago. So I think all I would have to say to the group is congratulations on all of the success you've had. I'll commend you for your passion. In my experience, I think that's what sort of takes all of us to the highest of heights, finding something that we love, a class of entrepreneurs and executives that we like to work with. And then that tends to yield sort of the very best of transactions. So by virtue of you being here, I know that you've done great things. And, cheers to your future success all. Have a wonderful, stable 2021.
And the next winners are Michael Morton, Managing Director, Ancora Consulting Group, LLC. Dustin Olver, Senior Managing Director, FTI Consulting. Yogesh Punjabi, Director, Capstone Headwaters. Devi Rajani, Senior Managing Director, FTI Consulting. Eric Ribichonik, Principal, UHY LLP. And now a word from our friends at UHY Advisors.
Good afternoon. I'm Eric Ribichonik, a Managing Director at UHY Advisors. UHY is one of the top accounting and consulting firms in the U.S. and a member of the UHY Global Network. I'm honored to be named an emerging leader by the M&A Advisor, and I'd like to congratulate all of my fellow honorees this evening. In celebrating this achievement, I've had the opportunity to personally reflect on what I have accomplished, both personally and professionally. This achievement, while substantial for each and every one of us, is just the beginning in what I hope will be a long and rewarding journey. I'm excited for my honorees, and I wish them all a lifetime of happiness and success. Thanks so much.
And the next winners are John Rockwell, Partner, Wilmer Hale. Joseph Scott, Director, Corporate Development, Arconic. Jessica Seff, Vice President, Mergers and Acquisitions, Statesman Corporate Finance. And now a word from our friends at Leonis Partners.
Hi, Rob Burton here with Leonis Partners. I wanted to say thank you for the invitation to the event here from the M&A Advisor. We've had an exceptional year at Leonis and couldn't have done it without the hard work of our team, a growing team and a really exciting team for the coming years and the next 12, 24, 36 months. Also want to send out a huge thank you to our clients who have trusted us throughout the course of the last 12 months, through ups and downs, during COVID, during a massive amount of uncertainty, to guide their transaction from start to close. We couldn't have done it without their trust, without their backing and support, and we're very excited that we were able to provide such great outcomes across what has been an incredibly difficult year. So thank you very much to our clients. Thank you so much to our team, and very excited to see what we can all do together in the next year.
And the next winners are Anastasia Scheffler-Wood, Partner, Stradley Ronan, Stevens & Young, LLP. Sunny Singh, Partner, Business Finance and Restructuring Department, Weil, Gottschall & Manges, LLP. I would now like to introduce our Outlook for 2021 keynote panel discussion participants. Today's panel is led by Jack Butler, Chief Executive Officer, Birch Lake Holdings, LP, and will be featuring the Honorable Michelle H. Harner, United States Bankruptcy Court Judge, Jay Goffman, Vice Chairman, Global Advisory, Rothschild & Company, Scott Victor, Founder and Managing Director, SSG Capital Advisors, Lorie Beers, Managing Director, Head of Special Situations, Cowen & Company, and Jamie Sprayregen, Partner, Kirkland & Ellis. And now, over to you, Jack.
So after experiencing a year like no other, it's been dominated by the most global, serious epidemic in a century, we moved into 2021. I think we're all buoyed by a sense of optimism that there's a vaccine light at the end of the tunnel, but we face daunting challenges in this country. We're polarized politically like never before. We're navigating the first non-peaceful transition of power in our history. We are battling a pandemic that already ranks as one of the top 3 disasters and epidemics of all time, surpassed only by the fatalities in the 1918 Spanish flu and HIV/AIDS. And notwithstanding trillions and trillions of dollars of stimulus that have been delivered and will be delivered in the next few months into the U.S. economy, we face enormous social and economic obstacles to recovery. I think chief among them may be the realization that there are fundamental corporate and consumer behavior changes that may alter how our communities work, where we work and how we live and how we go about our daily lives. And so thinking about that as setting the table, let me just ask Judge Harner first a little bit about consumer behavior. I think it's good to start talking about people and make this a kind of a people first conversation. And one of the things that's striking when you look back at 2020, and when you look at the bankruptcy statistics, for example, that bankruptcy cases were up over a third, mega cases a much higher rate than that. But despite the pandemic, despite all of the pain and suffering of consumers in this country, consumer bankruptcies declined by almost a third last year and are at the lowest rate in many, many years. And they declined at a much higher rate of decline in the most recent months. So Judge Harner is someone who has consumer bankruptcy people in front of you every day. And as someone I know is in your career has focused on the cause of trying to help consumers navigate their lives and to deal with the consumer bankruptcy system. Can you share any insights how you and your colleagues are looking at this? Because I gotta believe that's not what you expected in your chambers and across the country. That's not what the bankruptcy courts, I think, were bracing for, were they?
You know, it wasn't. And I want to start by saying I think both businesses and consumers are really hurting right now. And I don't think the numbers we're seeing in the bankruptcy statistics necessarily reflect the pain being felt by our consumers. As you noted, businesses have used the bankruptcy system to try to help mitigate their financial distress. And I should note that part of that trend are small businesses. Small businesses do include some individuals. And in fact, we've seen over 1,000 small businesses use the new subchapter 5 of Chapter 11 since the pandemic started. But that trend has not continued into Chapter 7 and Chapter 13 for individuals. And so I'll give you my 3 best guesses as to why that is. First, I do think the stimulus checks, and more importantly, the moratorium on evictions and foreclosures have helped. It's helped the immediacy of the problems that consumers are facing. Second, if you think about consumers who are in financial distress and who are homeowners, our bankruptcy system really doesn't work for them right now. If you're a consumer who wants to save your home, you usually file a Chapter 13 case. You have to have a steady source of income, and you have to be able to start making Chapter 13 plan payments immediately upon filing. Many consumers can't do that. They're unemployed. Yes, they still own their home. Yes, they still want to keep their home, but they may not be able to make a Chapter 13 case right now work. And if you think about the CARES Act that was passed in March of 2020, that helped consumers who had confirmed Chapter 13 plans. It gave them more time to make their plan payments. But if you didn't have a confirmed plan or you hadn't filed Chapter 13 yet, it doesn't really help you. And then finally, I just think with all the uncertainty we're all living in, many consumers, even though they're hurting, are just laying low, waiting to see what happens. And it may be that once the moratorium is lifted and the relief from the government, both state and federal, stops, we may see the real impact of this pandemic.
So I'm going to walk around the roundtable and ask each of you, in responding to Judge Harner's observations, do you think there's been a fundamental change in consumer behavior? And is there a fundamental change in corporate behavior as we come out of this pandemic? I mean, I think one of the challenges as investors when we look at this and trying to figure out what's next is you know, what's going to happen to hospitality and transportation and commercial real estate and downtowns and conventions and tax bases. And, you know, the list goes on and on and on. So Jay, I'm gonna go right around. I'll go to Jay, Lorie, Scott, and then ask Jamie you to finish up on this question. But how do you parse all this together as we look forward here at the beginning of 2021?
Good. Thanks, Jack. Look, I think you hit on all the right topics there. When you think about fundamental changes in how we all live and how we work, we're all getting used to doing Zoom calls. We're all getting used to working from home. It means less business travel, even when the pandemic is over. It means companies will need less commercial real estate space. It means the people that live in cities so that they can commute a short distance to work won't have to, and they can move out of the city. They can move to other states. And that will have an impact on municipalities and how they pay for their own crisis. So there will be that change. Now, I actually don't think you're going to see it in 2021 as much. I think there are other factors that the government and the Fed are going to continue with that will make 2021 more of a transition type year. But long term, the issues that you're hitting on, you know, how we live our lives, how much people go back to business travel, how big the offices need to be, and where people will want to live, will have a major impact on everything we do in this country.
Lorie?
Yeah, I agree with what Jay said, although I might take issue with the issue of fundamental. I think there will certainly be a disruptive change for a period of time post-pandemic, and that Jay's right. We'll work differently, we'll travel differently. And I think, by the way, the fact that there's less business travel will also have a significant impact on leisure travel, because as everyone knows, the front of the plane pays for the back of the plane. So if there's fewer business travelers, it means that the price of leisure travel is going to go up, which means that that people are not going to be as mobile as they were. But I'm not so sure that it doesn't, if history is any teacher, we know that, a period of time passes after a crisis and things tend to drift back slowly, but drift back to where they were. So I'm not so sure I believe that it's fundamental, but I do think for a period of time we're going to see, major changes in the areas that Jay mentioned. I also think we've seen where I think there might be fundamental shift is in things like retail. I think people are much more comfortable buying things online, getting things delivered than they used to be. So I think that it might be a more fundamental permanent shift. I think some of the others will come back.
Scott, what do you think?
Well, like the great Zen master said, we'll see. I think there are some fundamental shifts for sure. I, for one, have no desire to ever go to a conference again. I think it's great. That's been one of the best things about this year, not going to any conferences. Love it. Happy to do it on a Zoom call. I do miss leisure travel, hotels. You just saw the Wardman Park in Washington, the Marriott file. I don't know how hotels are staying in existence. I did a whole bunch of restaurant chain bankruptcies this past year, doing a big food service company now. Everybody that's in food services is very distressed right now, obviously. Will the world come back? Yeah, eventually. I agree with Jay. It'll be probably sometime in 22. There's going to be a lot of stimulus this year. Our national debt is going to go up even higher than it is today. But who knows? Who knows what's going to happen? I think commercial real estate, it's a problem. Every single one of you are working from home, except me. I'm in the office. I'm in suburban Philadelphia. So everybody's been back here since June, but everybody who's in a major city, New York, Chicago, LA, no one's back in their office. How's commercial real estate going to deal with this? How are the malls going to deal with this? Because what Lorie said is right. I think retail is fundamentally changed. If you don't have a major omnichannel presence with large online, how are you ever going to survive? You're just not. Nobody's going back to the malls anymore. So I agree with everybody. We all see things from very different perspectives. Lorie and I are much more in the mid to lower middle market. You, Jamie, and Jay are certainly in the upper markets. These lower middle market companies have been really decimated with COVID this year. Crazy.
Scott, I disagree with one thing you said. If you're speaking at a conference, I'm showing up.
Me too.
Well, it's interesting. We talk about consumer behavior, right? We all have a fundamental need to connect with each other, right? And we have a fundamental need. We are social animals. And the question will be, I think one of the things that is so odd, at least it was for me, thinking about this, reflecting at New Year's, is I can actually count on one hand, right? The actual adult social interactions in a social setting, going out with couples, doing things that were kind of fun, that last year compared to a time when I would be doing it almost every weekend. I mean, just a very and it was almost shocking to realize how it is. And so, Jamie, when you think about winners and losers, and there's certainly some industries that are winning right now, that COVID's not been bad for, but there's been others that have been decimated. But as you look at the world, how do you see the 2021 and 2022 playing out?
Well, I can't quote the Zen master, but I guess I'll quote Yogi Berra, who says it's difficult to make, especially about the future. So I'll kind of do the best I can. I'm probably a little off from what most of you were saying. And, there's that famous book, crises about this time is different and that it's not really ever any different. I don't know. It's, you talk about like winners and losers. all of us on this call, with due respect to people's birth dates, are on the older end of the spectrum in terms of our development of our careers and our networks. I think the biggest losers of all, I think, are the younger people. I have 3 kids in their 20s, actually one's 31. And the value, if you go back and look at the value of what I call serendipity over how you develop your business, your network, your friends, your professional circle, are all based on some sort of in-person thing, and all probably mostly accidental, but as a result of being in the hallway in court, or in a long settlement conference in conference rooms, or at some training session or some conference, not necessarily the educational part of it, but the fun and games before, during, and after. And the ability of young people to get trained and to get inculcated with the culture of their institution and all of that, I think that's a big problem. And I still think that when you say winners and losers, I think you actually had a flattening the competitive advantage. Significant, what I'll call go-getters, have had, who are willing to be anywhere, do anything at any time in any place, to win a deal or get things done, because everybody can dial into Zoom. But I do believe the first time there's a pitch for a new deal and 5 people pitch and 5 are on the phone and 1 person's in person and they win that's the last time those 5 people are going to be pitching by Zoom. Right now it doesn't matter because we're not capable of doing it. When it's matter is when there's an option of can you go somewhere and you choose whether to be on Zoom, or I don't know what we're on something other than Zoom, but something electronic, and you don't do that. Now, I'm not sure that's what you were asking, Jack, because when you say winners and losers, I'm talking about people. If you're talking about businesses, it's been, quite serendipitous. I have a private equity client who's got a whole bunch of portfolio companies, some in the travel area, that have been tremendously hurt by what's gone on here. Obviously, they happen to have a portfolio company that makes ammonia, and they've been running 24/7 off the charts ever since this hit, because that goes into the hand sanitizer. So there's the obvious winners and losers, the airlines and things like that, are there, or not winners, but losers. But you go through that supply chain into the secondary and tertiary, and I don't know what you call the fourth guy, the quadricary or whatever, to provide the hand towel to the airline and everything that goes through that. Those people have been hurt badly. And I think some of it is an acceleration of a secular trend, particularly in retail. And I think most of the bankruptcies you saw happen in 20 were going to happen anyway. But they might not have happened until 21, 22, maybe later. And you had a 3 to 5 year retail cycle. You didn't have that many travel entities actually go in because of what the government did. But that area, travel, logistics, etc. But there's a decent number of winners, and I heard a stat that I love, that the applications for new employment identification numbers were off the charts during the pandemic, and that's generally used as a sign by the government of what's the health of entrepreneurialism of small businesses in the United States. And this is a anecdotal, but I've read a lot of people who got shut out of their gym job, and they went and formed their own fitness program for people on Zoom. And there's been a burst of entrepreneurial activity, and the book isn't written on that, and we'll see how that goes out. But I think there's been a lot of people who've figured out ways to pivot and deal with this kind of situation. I'll stop there. I could go on for a while.
Jay, let me ask you real briefly, to try to sort of help us level set the free flow of capital that's going on right now. There's lots of capital chasing transactions. The Dow Jones and other indices are at all-time highs. And how do we, as the president-elect has talked about, the difference between Wall Street and Main Street? How do we reconcile what appears to be going on on Wall Street and in the capital markets? Although treasuries are going up very steadily right now, How do we reconcile that against the real pain on Main Street, where people are having trouble, actually in many communities putting food on the table?
Yeah, look, it's the right question, because it's very easy to just focus on the stock market and the larger companies that many of us deal with and forget about the pain that the individuals are handling right now. There are many people in this country who are out of work, who are have food shortages, who don't know how they're going to pay their bills and don't know how they're going to pay their mortgages. And those people are really suffering. And then there are smaller businesses, that Scott and Lorie mentioned, whether it's restaurants or bars or that are being hurt in ways that they're never going to recover from. On the other hand, you have the larger companies that many of us deal with that were a lot less impacted. And it's really a factor of how the government stepped in. When the crisis really hit back in March, we'll remember that the Fed stepped up immediately. They brought interest rates all the way down, and they provided massive liquidity to the markets. They said that for the first time, they'll buy non-investment grade debt. And that opened up all the liquidity again, which allowed basically all the larger companies, except those that were going to have to file anyway. As Jamie and Scott and Lorie mentioned, you had the retailers that had been on death's doorstep for years anyway, and they filed. And you had certain energy companies that had just been struggling, and they filed anyway. But the vast majority of them, of the larger companies, they were able to just refinance. They take on more debt, push everything out for a year or two, do amend and extends, relax covenants. Now, in the long run, what that means is that we have billions and billions of dollars of additional leverage on all these companies that they're going to someday have to figure out how to pay for, and that's likely going to be through restructuring. And we have trillions of dollars of additional U.S. government debt that the next generation is going to have to figure out how to pay for. So I think when I sort of break it down, short term, the efforts of the U.S. government and the Federal Reserve helped us get through 2020, will help us get through 2021 and allow things to stabilize. But long term, we have massive restructurings, both for the U.S. government, the municipalities, and all the companies that took on all this excess leverage. They're going to have to be worked through over many years.
So a final question, and we'll do it in a speed round format so that everyone gets a sentence or two and as they think about this. But on a scale of 1 to 10, I'm now going to change up the subject a little bit. Looking forward with your degree of optimism, with 10 being I'm really optimistic and 1 being we're headed towards a huge depression. How do you think about the economy and the country over the next 12 months? How optimistic are you or pessimistic are you on a sort of scale of 1 to 10? And coupled with that, if you could give the new administration one piece of advice, one thing that they should do to move the country forward in 2021, what would that be? Lorie, you're first. We're going to go real quickly. Those 2 questions.
Okay, I think I'm a 4, and I think that in terms of largely because I think there's a lot of pent up stress that has not yet bubbled to the top, and I guess in terms of advice, I think that we need to sort of stay the course on the stimulus actions and try to make sure that we're helping people who are food insecure and jobless to get through the worst parts of this.
Scott.
I'm much more optimistic. I'd say I'm an 8. Yes, we absolutely have to deal with food insecurity. That's just the worst thing in the world. And deal with the people who are unemployed as a result of COVID. But I think in the long run, I'm very optimistic. There's a lot of liquidity. I think everyone's going to get through this. I got my vaccine today, miraculously. So very hopeful about everyone getting their vaccine sooner rather than later. And we'll see how it goes. But I'm overly optimistic.
Jamie.
I'd say 3 things they need to do: vaccine, vaccine, and vaccine, because I think that's what will allow us to get back to normal. And I'm sort of in between Lorie and Scott. I'm at 6.78. I think that Short term, I'm actually optimistic. I think what the government has done, apropos to what Jay is going to hold things in good stead through maybe all of 21 into 22, whatever. But I'm midterm to long-term pessimistic, or maybe optimistic for the restructuring business, because as Jay said, I agree with him. At some point, we're going to need to deal with the debt that these companies, but in the short term, we're going to muddle through.
Judge Harner.
So I'm going to say I'm a 5 because I actually think fundamentals are pretty sound. I think the economy is going to recover. I worry about individuals who were marginalized before the pandemic being forgotten about and being marginalized further, and also worry about the maturity walls that we've kicked down the road, as both Jamie and Jay have mentioned. I think at some point we're going to have to face those and deal with them in the restructurings. As far as advice for those in Washington, I think we need some help figuring out what to do with all of the defaulted debt that's accrued over the past 9 months. You can't simply lift a moratorium and expect everyone to be able to pay what they now owe for the past 9 months. So I think working on some guidelines for forbearance and recoveries for both individuals and businesses with respect to landlords and mortgages would be helpful.
Well, I should mention, I appreciate that, Judge Harner, that all of you are invited to participate today because all of you have received a membership in M&A Advisors Hall of Fame and have earned many of you lifetime achievement awards and leadership awards for your service to the community. I want to finish with Jay, who is actually the latest or most recent of the lifetime achievement award winners and the newest member of M&A Advisors Hall of Fame, and just simply say to you, Jay, where are you on the scale of 1 to 10, and what would you tell the president?
Sure. So first of all, I must be the newest member because I must be the youngest in this group. We all know that's not true. But what I would say is, I think for 2021, I'm probably at about a 5.5, because I do think we're going to be fine in terms of the larger companies and the overall economy, because I think the U.S. government's going to put trillions of dollars to work, and I think the Fed will keep interest rates close to zero, and I think they're going to keep the liquidity in the marketplace. So I think we're fine for now, but I still think when you look 2, 3, 4 years down the road, we're probably at a 9 at that point, because I think there's going to be trillions of dollars of debt that need to be fixed. In terms of my advice to President Biden, it's the same as Jamie's. Deal with the coronavirus first. It's what we've all said from the beginning. Until you fix that problem, nothing else can begin to stabilize. And once we do that, and by getting enough vaccines out there, everything will start to stabilize. It'll be different. There'll be a new normal, but it'll start to stabilize. The other thing I would tell them is tell the truth. I think people in this country are smart, they're tough, they're rational, and they're reasonable. And if they hear the truth, everybody will adjust to it, they'll adapt to it, and we'll get through this together. So that's my advice.
Well, that's the last word. And Scott, while this might perturb you, you all are going to end up getting an in-person invitation down the line when we can all gather together. And we'll try to do some element of this live, looking backwards and looking aheadward from whatever that point of time is. Hopefully it'll be at the end of this year, if not sooner. But thank you all very much.
Thank you, guys.
Thank you.
Thanks,
Take
everybody.
care.
Good to see everyone.
And the next winners are Miles Staglick, Director, Sierra Constellation Partners, LLC. Michael Thomason Jr., Attorney at Law, Partner, Bradley Arendt Bolt Cummings, LLP. Ryan Wagner, of Counsel, Greenberg Traurig, LLP. And now back to our keynote panelists who have a word for this year's Emerging Leaders.
So this is a special message that all of us sitting on this roundtable wanted to share with our emerging leaders. This is we are at a year like no other and a time like no other. Those of us who've had the opportunity to have some leadership experiences in the industry, I just wanted to share our perspectives with you and our advice for would be on what lies ahead. So I'm just going to start, Judge Harner, if I would, good with you, and we'll just go around the table.
Sure. So when I taught law school, I always told my business law students that when they're in the boardroom, they're the grown-up in the room. They're the ones who need to be thinking about the unexpected and the unwanted. And I think if the past 9 months have taught us anything, it's that you can't predict the future, and you need to be prepared and nimble enough to address the uncertain and the unknown. So I hope as you young folks, as leaders, go forward in your careers, you take this experience and really broaden your horizons to always be anticipating and thinking about what might happen and how to mitigate it.
Jay.
Sure. Look, this has been an extraordinary year for everyone. We've had to change the way we live. We've had to deal with stress beyond that which any of us have ever recognized. And I think it's been hardest probably on the younger people who haven't had the ability to socialize with people as they begin their careers, which is important. But as we've talked about, stress is not a bad thing. There's an old story that says, if something doesn't kill you, it'll make you stronger. And I think that's what it'll be for our younger people. I think I'm extremely optimistic about the next generation. I think they're smart. I think they're tough. And I think they're going to learn from this experience. And I think they're going to make the world a better place for the generations after. Hopefully, they'll do a better job of making the world better than we did. And so I vote for the next generation. I'm completely optimistic.
Lorie.
I agree with Jay. I would say to the next generation, the flip side of discouragement and disappointment is grit. And, I think that we've all, the generations that came before you, those between you and the next generation, had a little bit of a cushy, entitled perspective to things. And I think that having lived through this pandemic, we've all been disappointed. We've all been discouraged from time to time. And I think that we've learned to dig deep and find that inner grit to get to the next level. And I'm with Jay. I vote for the next generation.
Scott.
I don't think we had anything cushy. Being next generation in the 70s and 80s, that wasn't so cushy, but we're all here. And you too, the next generation, in 40 years will be where we are. So work hard, be the best at what you do. That's always the best advice I have.
Jamie.
I would say this too shall pass. I think that it looks now and how difficult it is and how impactful it is to imagine things ever getting back to normal. I think they will go back to, call it the new normal. Probably won't be, what it was. Be a lot closer to what it was than what it is now. And I think you got to persevere and power through. And one, specific piece of advice is, because it's just harder to get out there and meet people and do things these days, be more aggressive, be more proactive. If, for example, you're looking for, don't be shy, call people up, ask for a Zoom, schedule a conference call. You meet people in some deals you're doing, follow up with them in some sidebar and ask for ways to interact. It's a lot harder now, but people are actually thirsting for that. And I think people would be surprised if you're shy about doing that, about the positive reaction they'll get.
And let me just say, the advice I would give to you is connect, connect, connect. It is, above all things, the most valuable asset you have, in addition to your own grit and intellect and work ethic, is your network. And getting to know people, not losing track of them, reaching out and being selfless from time to time, helping other people, I think is extremely important. And I think will pay dividends beyond what you might imagine. So I also think that you all are a very entrepreneurial group, and you'll find innovative and creative ways to get around all this. You already communicate in using platforms and devices that none of us had the opportunity to use, and even now, my teenage kids and folks we know in college and young people in their 20s and 30s have an entire different approach to how they reach out and network. So we're just encouraging you to remember that people come first. They come first in business. They come first personally. And if you mend and you pay attention to those relationships and keep those at the forefront as you move forward in your career, you're likely to be successful. So good luck.
Yes, good luck all.
Well said.
Good luck.
And the next winners are Jack Wagner, Business Development Associate, Capstone Headwaters; Craig Worsnack, Vice President, SSG Capital Advisors, LLC. Jill White, Principal, Underwriting and Portfolio Management, Churchill Asset Management, LLC. Thank you very much for joining our 11th Annual Emerging Leaders Awards hosted by the M&A Advisor. And congratulations again to all of our winners. We will now be concluding the awards section of our program and opening networking to all of our attendees. But first, a quick thank you again to our supporters and sponsors, including UHY Advisors, Generational Group, Millcap Partners LLC, L. Catterton, Leonis Partners, Churchill, Jordan Knopf & Company, Horizon Partners, Prairie Capital Advisors, Ernst & Young LLP, Wombat Capital Markets, Kramer Levin, Stradley Ronan Stevens & Young LLP, Global Upside Corporation, SB 360 Capital Partners LLC, Capstone Headwaters, Axit Capital Partners, Paulsonelli, and VRC Valuation Research Company. We encourage you to visit our sponsors' exhibit tables while you take advantage of all the other features of our brand new digital platform by clicking Join Networking on your screen below.